Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, September 16, 2014. Daily chart, SPY. Look at this up green candle today. What happened today was interesting. So let's discuss the series of events that took place today. So the market opens down today, okay, right here. Okay, we gap down, we make a low, and then we start higher, okay, and then we start to retrace. And right about here, this is what happened. In the Wall Street Journal, now remember, this is options expiration week. It's the Fed announcement week, which is the meeting is today and tomorrow, and they have their announcement tomorrow. And then you have the Alibaba stuff, and you have the Scotland stuff going on. So what happened today was an article comes out in the Wall Street Journal from a guy named Jon Hilsenrath. Now, this guy seems to be the go-to guy for the Federal Reserve. Through most of Bernanke's tenure over there, basically, whenever there was something going on and there was a lot of consternation about what the Fed was going to say, all of a sudden, the day before or 2 days before, an article would come out and it would pinpoint exactly something that the Fed was going to say, and they wanted to gauge a market reaction. He would write an article about it. He obviously was told what to write about from the Fed. Now, this isn't a conspiracy theory. This is as close to factual as you can get. These things don't happen by accident, okay? The same guy all of a sudden writes an article and the market goes up, and this isn't the first time, and it's the same guy that writes an article based on, I guarantee you, what was in the article today will be something of interest tomorrow, what the Fed will or won't say, and it had to do with their language around whether they're going to continue the low interest rate policy for an extended period of time, and that's basically the point. So he's saying that they're not going to take that language out of their policy statement, which means that they're going to tell us that they're still going to maintain a low interest rate policy for some time to come. And that's the best guess of what's going to happen. Other than that, no idea. Nobody knows. It's not that we don't know what they're going to say. They're really going to say a bunch of nonsense. It's that we don't know how the market's going to react. We can make up stories on top of stories how the market's going to react to what the Fed's going to say. But the reality is you just don't know. Usually what happens is the market goes one way as soon as the Fed comes out with their statement, and like 9 or 9.5 out of 10 times, it's the wrong way, and it goes the other way 10 minutes later. That happens each and every time. You can go back to every day the Fed announcement. You can look at the 10-minute chart, and you can see exactly what I'm talking about. So I would expect exactly the same tomorrow. But nevertheless, it doesn't change the overall picture. But what I am telling you, or what I will tell you, is that if the market perceives the Federal Reserve news as positive, okay, and we have another update tomorrow, what's going to happen is you're going to run a lot of stops that are up above 2,000 on the S&P, and it's going to start to drive the market higher. And it's going to drive the market probably 1 to 1.5% higher, not necessarily all in one day, but the next stop is really going to be around that, let's say, 225 to 235, 2025 to 2035 neighborhood on the S&P. And then we have to assess from there if that happens. So that's kind of the expectation. So we'll take it one day at a time. But also, no matter what the Fed says tomorrow, you can almost bet your bottom dollar that because on Friday we have the Alibaba IPO, that nothing terrible is going to happen in the market. I'm going to almost take that one to the bank. So don't guess on which way the market's going to go and make a bet that way. It's not worth it. It just always goes the opposite way. Let it play out. See what happens. Let's let the charts tell us what to do. Look, I don't watch the they're going to have the announcement's going to come out about 2:00, and then I think the Janet Yellen is going to have a press conference, like a phony press conference at 2:30. Basically, I don't even watch that stuff. It's nonsense. I can tell you what she's going to say. She's going to say the economic numbers are improving, but we're still in a slow recovery, and we still have an unemployment issue to address, and we're going to keep interest rates low for an extended period of time to continue to support the economy, and blah, 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 blah. That's exactly what's going to happen. It's all about the words she uses and how the market players want to interpret the words, and then whatever direction the market starts, you're going to see a pile-on effect, and it's probably going to, if the S&P is going to go up tomorrow, it's not going to go up 5 points. It's probably going to go up 15 points or maybe even 20 points if it's going to happen. So that's kind of a guess. We'll see what happens. We'll take it one day at a time, and we'll let the charts, like always, tell us what to do. So that's my take on the market tomorrow. All right, let's swap over to gold, okay? And let's talk about gold for a second. Here's a 10-minute chart of gold. Let's go over to daily chart. It's a better picture. It's coming up. Okay, here we go. So the 10-minute chart of gold is still in a weak position. Now, gold tried to make a bounce today, but it was really unsuccessful. And for the most part, it finished flat. GLD was up 19 cents. That's flat. So here's the deal, though. Tomorrow, when the Fed makes their announcement, you have to interpret what they're saying. If they're going to keep interest rates low for an extended period of time, that means they're going to continue to buy bonds. That means they're going to continue to, really what will happen is the dollar will reverse and probably go down because it's really a weak dollar policy. See, the dollar has been going up based on the anticipation that the Fed's going to pull back on their bond buying program, and not put as much liquidity into the markets, which means that the dollar was strengthening on the anticipation that they're going to tighten. And so if we see the opposite effect tomorrow, you're going to see the dollar pull back because it's been somewhat in a parabolic move anyway, and then you're going to see the market probably go up if the dollar goes down, and gold will whip around. And if the dollar goes down, you might see gold up considerably. That tends to happen around these announcements. And the same goes for oil. And you've kind of already seen the bounce in oil. We talked about this bounce a couple of days ago down here, right? We talked exactly right here. It was on the number. I told you a break of 34. A break of 34 happened. We made a low and we reversed higher. And then we're probably going to continue up. I would say the USO, this is the USO. The USO is at least going to get to this area here where you have the 50 moving average converging with the 200 period average, but I don't think it's going to stop there. I think it's going to go higher, and I would look for 36.5 to 37 on the outside. Okay, but at least this level, and then I think this could be a short because I think lower prices are coming for oil. And if you want to talk about the price of crude, in my mind, crude is $85 and it's a buy. So we'll look at it when it's $85 later to buy, and we'll buy some stuff around crude that'll go up more than crude with more momentum. But that's what I see in that market. And tomorrow here, let's move over to the interest rate market. Tomorrow, you'll see the interest rate market go wild. You'll see the dollar go wild. You'll see gold go wild. And by the way, these things will go wild maybe for 15 minutes. That could happen. And then they'll pick a direction and they'll go that direction, and then probably, kind of float around the rest of the day. But they will go that direction for a while, whichever direction they pick. And if you want to pick it now, it's just a guess, so we don't bother. But here's the 10-year interest rate, and it's beginning to pull back again. But if you fill this gap and you bounce up, you can certainly make a run for this 200-period moving average, and you'll probably go through it up to about 270, maybe even this double top here at 273. So that's kind of what I'm looking for on the 10-year interest rate, which if interest rates are going up, bond prices are going down, and vice versa. So there's my take on gold, oil, interest rates, the market as a whole. And, let's take a look at a stock or two. Let's look at Apple. Okay, Apple's going to be a big play. Apple didn't do much today. It was down most of the day, and I think everybody's kind of waiting to see what happens with, I think their new products are going on sale maybe this week, and then we're going to obviously get some numbers, and they're going to be fantastic, and Apple's going to go back up. But if Apple continues down and we break this pivot low here, you're probably going to find some support either on the outside at this level at 93 and a quarter, or at this gap fill here at 95 looks pretty good, or this gap window at 95.18, call it 95. So that's something to look for. If we get a kind of a swoon down in Apple, there's a buy in there, because I think the market will be supported in Apple, and so we'll take it from there. We'll see what happens. We'll see what the market tells us what to do. Do we want to look at any other stocks? No, I think we'll leave it there tonight. This is about everything I wanted to discuss. It's really important that you keep your eye on the Fed, you keep your eye on Alibaba, Scotland, all that stuff. This is a big week. Quadruple witching week. There's a lot of jockeying for position going on, a lot of rebalancing, baskets of stocks rebalanced, index rebalanced. All that stuff's going on, and it's going to come to a conclusion on Friday. So that's where we stand, folks. I'm David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis. Thanks for tuning in.